Let's in fact get back to the conversation about the stock markets, Deep, because I understand that we have our guest, Mayuresh Joshi. He's a fund manager, Angel Broking, who's joining us now. Mayuresh, thanks for coming on to the show. We looked at the kind of gains that we'd seen yesterday in the markets. We're looking to see how these markets are panning out on the second day of this week. We've broken those particular levels as well. How do you see things in terms of sustainability going forward?
Right, I think there is some issue with Mayuresh's audio. We'll just try and reconnect with him. In the meanwhile, let's focus in on an Axis Bank, one of the gainers on the street today. Private banks, of course, have been buzzing off late. Axis Bank adding about 2% in trade right now, near the highest point of the day. Morgan Stanley betting big on Axis Bank. It says investors should now look beyond the asset quality concerns and, in fact, bet big on the bank going forward. Ankur has the highlights of that report. Ankur, Morgan Stanley pricing in a significant re-rating for the stock.
Yes, certainly. Morgan Stanley report on Axis Bank says that next couple of quarters will be volatile, but they expect investors to start looking beyond NPL cycle of bank. Morgan Stanley believes that underlying growth and market share gains of Axis Bank remain strong. As confidence in the bank book grows, discount to retail lenders should narrow. Usually when the NPL cycle hits bank, they tend to focus on stemming problems and growth suffers. However, Axis Bank continues to grow in the good parts of the business. The bank now has 6.1% share in retail loans versus 3.6% in 2011. Also, since the time bank has announced in June that it would introduce a watch list to map stress in corporate lending book, the market has reacted well to it. The expectations are that this watch list will be stable unless the economy dips sharply. In terms of valuations, Morgan Stanley believes that Axis is only large cap bank where the significant re-rating could be seen. They have mentioned that if the stock trades at 1 year forward PE multiple of 15 times, it could reach 900 by March 2018. Considering confidence in the long-term earnings, they have also increased the short-term target price of the stock, which is from 600 to 740 per share now.
All right, thanks for taking us through all of that. Always great to see you on air, Uncle, really telling us about Morgan Stanley and its bullishness on Axis Bank. I understand that we are once again joined by our guest, Deep. That's Mayuresh Joshi. He's a fund manager at Angel Broking. Mayuresh, before we lost your audio, I apologize for that. We were just talking about the kind of levels we saw yesterday and, of course, what we've seen breached today. How do you see sustainability going forward in these markets?
Good afternoon, Fatima. Again, I think the markets are probably working on two factors. I think the domestic growth consumption story probably scaling new highs because of good monsoons expected, the 7 pay commissions, and the reform processes that the government is embarking upon, largely to do with the GST bill expected to pass in this monsoon session. On the international bosses, again, with the Brexit event that has probably happened, no Fed hikes expected probably, at least for this policy, and largely I think very muted ones expected for the rest of the year. And add that up with the kind of liquidity that we are expected to see through, because I think around $12 trillion of debt is probably negative yields. So I think that money probably coming in with global easing coming on the central bank's coordinated action plan, that can have a telling effect in terms of how liquidity moves will happen. So yes, I think if I talk from a short-term perspective, the liquidity scenario might pan out positively for India and the other emerging markets, and the positive sentiments in the markets might continue. But the entire re-rating will be hinged on based upon how the corporate earnings are expected to grow. And for a large part of this year, my own take is that we should grow anywhere between 14 to 15%. And it does happen from the second half of this year, the markets can get re-rated. But at the current juncture, I think at around 17.5, 18 times, we are probably, I think, fairly valued. So I think it is going to be more flows. But again, the positive sentiments on the markets will continue in my opinion.
How do you see broader markets participating in this rally, Mayuresh? You have the mid-cap index sitting at a record high. You are beginning to see some of the sectors which we've not talked about in recent past also coming to the fore and contributing to the rally. What's your take on the broader market participation?
Again, I think the broader markets have outperformed the larger universe, and the entire premise on the argument is that the earnings are expected to grow. And again, I think there is very limited scope in terms of investing in large cap. But again, I think a whole host of mid caps have probably moved ahead of their stock prices. And if the earnings disappoint, you might have some amount of disappointment on that part. But yes, I think if you look at pockets, I think NBFCs have moved up very, very sharply. A whole host of mid cap, small cap, rural focused stocks, whether that be farm equipment solution players, whether that be agrochemical players, whether that be paint companies, have moved it quite sharply, and that has probably led to their valuations reaching their premium valuations, what we'd seen years back. So if I do a historical comparison on where the earnings matrix is compared to the valuations, I think a few of these sectors are richly valued at this point of time. So I think it will be very prudent to have a very stock-specific approach in the mid-cap universe, taking into account how valuations are expected to pan out and how the earnings story will be over the next 2 years.
Mayuresh, you've talked about some of those various sectors, and you've also mentioned the fact that going forward you're going to be looking at stock-specific action. But just very quickly before you go forward, I'd like your take, one, on the commodity cycle, and on a completely separate front on the pharma space.
So again, Fatima, I think the commodity cycle, you really need to break that up into the ferrous space and the non-ferrous space. And the data dependency depends on how China throws out its production and sales numbers. Add that up with the kind of LME inventory that is probably getting built up and the LME pricing related to the same. I think one really needs to be cognizant of that fact. Now take that up with the Indian context. I think with the MIP and the imposition of hikes, you're probably going to see some amount of respite when it comes to the end user realizations, whether that be ferrous or non-ferrous products. But largely I think the underlying demand is the growth driver for this industry as a whole. So unless that demand comes back in a significant manner, my entire take is that the operating leverage that one really talks about with improvement in volumes, that trickling down to the EBITDA, and that probably coming onto the bottom line, will take at least a couple of quarters. So my own sense is that it will be dependent on China. The commodity cycle probably might stop in terms of prices, specifically the LME pricing at this point of time. And again, I think if the Chinese data points are very, very strong, which I doubt over the next 2 to 3 months, you're not going to see a huge rally probably happening on the commodity space. So it will be more India domestic driven in terms of how the volumes are pushed through, and that might have a telling effect in terms of how the metal and commodity stocks might move.
In fact, Mayuresh, just as you were speaking, flashes on the bottom of our screen, Coal India, the government will conclude the share buyback by about October, and post that, in fact, will mull a divestment of about 5 to 10% stake within this financial year itself. Meanwhile, Coal India has shelved plans to buy back shares of its arms. So a lot happening as far as the metal and mining space is concerned. You've also had Alcoa earnings that have beaten street estimates, and you have seen some positive rub-off on Vedanta and Hindalco on back of that. But Mayuresh, just a word on Coal India, as also some of these other PSU divestment candidates. Coal India, of course, announcing a share buyback at a premium to current market price. The stock week in trade today. Any call on a Coal India or on any of these divestment names?
No, again, I think it's a larger perspective that one really needs to keep, and the production targets that the coal minister had put out over the next 2 to 3 years. Again, I think very ambitious in my opinion. If Coal India is able to achieve that, I think it's going to be a telling task in terms of how the revenues will move up. Again, I think one must realize that the buyback that they've probably announced, I think, yes, I think sentimentally positive, but I think it's a very minuscule portion. The kind of cash that they've got on their books, again, I think rarely getting utilized in their core business operations. So I think unless you see an operational trajectory improve, both in terms of end realizations improving across the grades of coal that they cater to, and specifically on the e-auction realizations, I think once we see improvement happening on that part, I think you'll see significant traction happening. But it's a long drawn out story. My own estimates for FY17, I think their production number should be anywhere between 560, 570. If they're able to achieve the target of 598 MT that they probably set out, I think it's a great achievement. But again, I think investors must realize that this is a story that cannot be played over a couple of quarters. This is a long-term story based on how the capex needs of the country are going to move. I think Coal India is going to be a big beneficiary of that program, and anybody having a longish more than 3 years can probably look at the stock on decline. Any lesser view, I think probably investors might get disappointed because the stock is not going to give you huge movements.
Mayuresh, just your quick take. We earlier saw Yes Bank sort of approaching its life highs. The big question really was that would one really go into stick to this particular stock or book at those particular levels? That's of course one part of the question. The second part is, what is your take when it comes to the private banking, the private bank space going forward?
Again, I think largely the private banking space is something that I have liked, and I'll continue to remain optimistic. The valuations, again, for a few of the players have become a little stretched. Now, the entire perspective here is how the credit cycle is expected to pan out, and the credit growth has not been very encouraging over the last 2 years for obvious reasons. But if one really expects that the credit cycle resumes in the second half of this fiscal, I think the retail-oriented banks can have a big advantage in terms of how their advances, specifically on the retail and consumer financing side, is expected to grow. Couple that up with the asset quality pressures, what we probably witnessed in the last 2 quarters in terms of the provisioning norms set out by RBI, one really expects the credit costs to remain low, and that is primarily because of the asset quality pressures probably not coming onto the balance sheet. So this entire scenario works out fine for the larger private sector banks, the retail-oriented banks. The corporate banks who have got corporate exposure, SME exposure, my take is probably, I think Q1, Q2 might see stability in terms of asset quality. And if that probably starts happening out, you might see the bottom out happening in terms of the asset quality cycle. And if any improvement happens sequentially and substantially, my own sense is that re-rating of these candidates can also take place. So as a space, I think the banking space and the private banking space, whether that be retail or the corporate oriented one, I think I remain extremely bullish and optimistic.
So let's also talk about all the developments in the primary market. So you've had Quest Corp that's made a stellar listing on the street. We in fact spoke with the management a little earlier on the company's debt profile as well as the margin prospects going forward. Before I ask Mayuresh my question, let's just hear out what the management of Quest Corp had to say.
Quest is a company that's been growing at a compound annual growth rate of almost 50% for the last 5 years. Any company that grows at that pace will need working capital to fund its growth. So some of our capital required for that has come through debt that we finance through banks. One of the purposes of this issue is to actually retire about 50 crores of that debt that's there. Another 160 crores we have apportioned for fresh growth. So we are comfortably positioned with equity in our books now to fund our growth. This is a business that will see some focus for the future, and we hope to have a reasonable market share of this. On margin accretive initiatives that we're doing, we're currently at about 5%, and we had a directional statement to get to about 8% of the company. If we are able to get to about 7% and retain our return on capital at 25%, I think it'll be a job well done, and that's what is our larger goal.
Mayuresh, primary markets abuzz with the activity, stellar listing for Quest Corp. You had Mahanagar Gas a couple of weeks ago, another strong listing over there. L&T Infotech, the subscription already reaching high levels for that one, receiving good response. Are you looking at any of these stocks, any bets that you have in some of these newly listed companies as also some of the IPOs that are coming up?
Now again, I think individually each company needs to be analyzed as per its business model. Take for instance Mahanagar Gas. I think the kind of positioning that the company has specifically in the PNG and CNG segment and the kind of under-penetration that we've seen, there is huge scope for improvement both in terms of volume growth as well as expectations of that operating leverage playing out once volume picks up on its balance sheet. So I think this is one company that can really do well operationally going forward as well. But again, the testimony to this performance will be consistency in numbers over the next few quarters. A few of the companies I think in the IPO or the primary market have got listed at stellar prices, and what really needs to take into cognizance the kind of valuations that they're currently deriving and whether the justification in terms of valuations going forward can be justified by numbers. And it's only the numbers that will do the talking. So my opinion is you need to wait out for at least a couple of quarters numbers, see whether the consistency in trend that they probably historically meted out are being achieved, and that is the case. And if the business environment generally improves, you might have a relook at those stocks even if the justification in terms of premium valuations are there to stay. So one needs to individually look at pockets within the primary IPO space. I think recent listings have done exceedingly well, but again I think you need to watch out for a couple of quarters numbers, see those consistency, and then take a fresh call on these stocks.
Okay, all right. Fair enough, Mayuresh. Just in terms of fresh news flow that's coming in, Rico Auto very much in top gear this afternoon as the company has set up a foundation for manufacturing plants in Rajasthan. In fact, we did have Arvind Kapoor, Chairman, Managing Director and CEO at Rico Auto, telling us about the latest.
We should be in production by the second to third quarter of next year. And the total investment that we are looking, the investment in the first phase that we are looking at is around 135 crores. And the turnover that we would expect from this investment would be in the region of about 340 crores. You'll see a growth of about 15 to 20% this year. And next year you'll find further increases based on the plants which we commissioned in Chennai, as well as this particular plant which would be commissioned in the second to third quarter of next year.
Okay, Mayuresh, you of course heard the latest that was coming out of the Chairman and MD and CEO at Rico Auto. But the larger question I have is when you're looking into the auto space and also the auto ancillary space, what are the factors that you look for in terms of making an opportunity attractive there?
So again, I think the larger universe, you probably need to divide that into different subsets. So within the auto universe, you probably got the PV space, you've got the MHCV space, and you've got the two-wheeler space. Similarly, I think if you're looking at the auto ancillary space, I think it is dependent largely on how these three main ingredients of the auto industry are expected to perform, both in terms of volume growth as well as the realizations at the end user industry level. So clearly, I think you'll be seeing some amount of sluggishness happening on the MHCV front, which I expect to continue for the next 2 to 3 months, to say the least. Two-wheeler sales, again, I think we are really optimistic over the next 2 years. Our entire thesis is based on good monsoons coming through, specifically abating rural discretionary spending. Couple that up with the 7th Pay Commission recommendations, which can have a telling effect in terms of numbers going up for at least the entry-level bikes and the other variants as well. So two-wheelers as a space, I think, should have a compounded growth rate of 10 to 12%. The PV space, again, I think is looking extremely encouraging, with whole host of models coming through, different platforms being launched, and again at very competitive prices. The MHCV discounting factor specifically is a little bit of a discrepanting factor to me, and again I think once we see volume pick up, the economy pick up, I think that angle will also start coming down. So extremely selective but very, very bullish on the two-wheeler space. The stocks might have moved up significantly and you might see some amount of pain during the monsoon season, but from Q3, Q4 onwards, my entire argument is that the volume pickup should be quite significant, and then the re-rating probably of these stocks can happen. So two-wheeler as a space is something that I like. The battery makers within the auto ancillary space is going to be a big beneficiary, both in terms of how two-wheeler volumes, the four-wheeler volumes are expected to grow, which I expect at a very decent and a healthy clip, along with developments happening on the telecom and the industrial capex side, where I think the battery makers also have some amount of exposure.
Extremely selective but bullish on the auto space. Mayuresh, earnings of course have kick-started. Strong show from IndusInd Bank yesterday. Watching out for those two big tech majors, TCS on Thursday, Infosys on Friday. What are your expectations from tech earnings this time around, considering the kind of currency volatility you could see post-Brexit? You could also have new client additions from that area on the back burner. What's your call on IT?
So I think it's going to be extremely crucial on what the managements are going to say, and again I think it would be an encouraging sign if the discretionary or the outsourcing spending increases for IT majors, because the whole host of top tier IT companies or the mid-tier IT companies selectively have got exposure towards the EU region. Having said that, my own sense is that the quarter-on-quarter dollar revenue growth should be quite reasonable for a whole host of IT companies. I think Q1 is an extremely strong quarter. Now the cross-currency headwinds can have an impact of anywhere between 40 to 60 bips on top tier companies. What that might do on the EBITDA margin will be a little bit of a compression on that front. But largely I think it's management commentaries that are going to be extremely crucial and key. And let's also understand that BFSI forms a significant portion. So any fallout from the Brexit event over the next few quarters and any cutback happening on the spending front, specifically from financial institutions within the EU, I think that can have some amount of EPS downgrades happening, but it's too premature to say at this point of time. So expecting a reasonable show coming through from the IT majors, and expecting that the constant currency growth, specifically for larger players, should be exceedingly good, and the management sticking on to their targets for FY17.
Right. Right, thank you for that. That was Mayuresh Joshi. He's a fund manager, Angel Broking. Thanks for coming into this show. Still ahead on Lunch Money, we get you the Ace Investor.